Hello, my name is Denicia Butte, Community Content Lead at the Cardano Foundation. Today we have we're we're, we're hosting Roundtable Talk number 13, Understanding Stablecoin Liquidity within the Cardano Ecosystem. Joining me today is Giorgio, Brandon, James, Marco Elder, and Vinith. I'll allow them briefly to introduce themselves, starting with you, Giorgio, and ending with you, Vinith.
Yes, I'm Giorgio Zinetti, CTO at the Cardano Foundation.
Thank you. No, you're muted, Brandon. No, still can't hear you. We will come back to you, though. But let's move further to James while you look into that. James.
Yep. My name is James Meidinger. I'm the business development lead and part of the founding members of USDM, fiat-backed stablecoin here on Cardano.
Thank you. Great to have you.
Hey everyone, Marco, just a community member here in Cardano and across a bunch of ecosystems.
Welcome.
Yeah, so I am Elder Millennial. I'm the founder of SteelSwap, and I, along with Marco, co-authored the proposal.
Thank you. Vinith.
Hi, my name is Vineet Bhuvanagiri. I'm the CEO of Anzens, the founding entity of USDA.
Okay, thank you. Brandon, how's your sound? Okay. No, unfortunately, still not. I'm pretty sure Sebastian will be helping you in the background to fix that. But you know, for quite some time, the topic about, let's say, boosting stablecoin liquidity within the Cardano Foundation has been a topic, and you know, this is really, let's say, the right moment to discuss that, especially now that, let's say, you know, within this phase we're in this phase of governance where the Treasury is accessible, and we can potentially utilize that for specifically this purpose. But you know, what is that? What is this idea of a stable coin? And why is it so necessary within an ecosystem like Cardano to, let's say, help DeFi thrive? What are the risks involved in this? We will dive into all of these and more. But before that, I will allow Elder Millennial, because I think you have something really interesting to mention about this whole idea, where it came from. Elder, please.
Yeah. So, yeah, I guess the main point of this is, you know, to really try to help boost liquidity in the ecosystem. And I don't see this as kind of like a cure-all for all of Cardano, but it's one of the ways to try and help jumpstart and tackle one of the fundamental issues that I think we've all kind of seen on chain. And really, you know, one of the ways that I, along with Marco, have tried to design this proposal is we've tried to design it in such a way where we can try to help bring the entire Cardano community together. So I think, you know, a lot of Cardano has had, you know, a lot of issues for one reason or another, right or wrong, you know, between founding entities and various projects and stuff like that. And I guess, you know, one of the things that I think we were really hoping for is to really try and create this as kind of like a unifying proposal to try and help bring the Cardano community back together and help to drive, you know, growth of Cardano as a whole. So, yeah, that was
perfect.
Just, yeah.
I think you mentioned as well that you were not the only one part of this initiative. There were multiple others part of this, right? Do you care to elaborate a bit on that?
Yeah, so I mean, so Marco and I were the, you know, kind of the chief authors of this. But in addition to that, you know, we've really got a lot of feedback from a variety of people. So, you know, we've tried to interact with the founding entities a bit to get their feedback on, you know, pros and cons. You know, I've reached out to Moneta to try and get some feedback from them. You know, so this is really, you know, as much as possible a community effort. You know, I've tried to respond to as many of the various people who have been trying to comment and trying to help improve it, and really not taking, you know, any of the criticisms as kind of like, you know, trying to tear it down, because I think everybody really wants to see Cardano thrive, and they all see this as an opportunity. Everybody has, you know, various perspectives on it, but I think it's really helped to morph this proposal into something that's really quite strong now.
Yeah, understand. How was that? Because you mentioned the founding entities. Were they part of this as well?
In terms of constructing the proposal, no. In terms of providing feedback and giving input on it, yes. But like I also do want to say that it was feedback and input, not actual writing, right? So Marco and I are the ones who have done all of the writing. And, you know, what we've tried to do is we've tried to make sure that as we get feedback and input from, you know, various the different funding entities, we're making sure that, you know, we're trying to balance it across everything to make sure everything is kind of like as fair and like unbiased as possible.
Exactly. Wow, wonderful. So that also shows basically that despite, let's say, the tension that some people may see happening like on socials, a lot of collaborative work is happening behind the scenes that people might not be aware of. I'm just gonna turn to Brandon, because you did not have the chance to introduce yourself. Brandon. Still not, still no sound, Brandon. We'll look into that. Sure. All right. Giorgio, how was your experience with, let's say, you're providing your feedback to such a proposal when it comes to really using the treasury funds to boost stablecoin liquidity?
Yeah, as I said in another space, I think I had the same idea at the same time, and then I came across Elder's idea and was much better thought through and put down. So I just said, okay, let's just bring the things together and just help support as a CF. And I think it's a no-brainer, and I'm supportive of the initiative. So I'm really hoping that today we can dispel some criticism or some fears and get feedback and move this thing forward.
Absolutely, absolutely. Okay, don't fear, everyone. I mean, I will come to you in a bit, but I do want to kind of structure the conversation, because there are many people within the ecosystem or new people joining the ecosystem who might not be aware of stablecoins or the use of thereof. And so I'm just going to turn to our viewers. I see we have here, who's that? Cristo Val, thank you for joining us here on YouTube. It's always great to have community members tune in and interact with us here. Now, I do know some of you have commented on X as well. If you would like to interact with the guests today or the table members, please do so. Just a quick request for me. If it's the first time you're joining the channel, you haven't yet subscribed to our YouTube channel, please subscribe. It does help us really grow the channel and spread the news about our ecosystem more effectively. If you're joining us on X, please reshare this space or reshare this roundtable talk, as the more people consume the information that is spoken of here, the more aware they become of the topic and more likely to engage, or let's say be more take well-informed decisions. That brings me really to kind of like the opening question here. Which of you here would like to explain briefly what is a stablecoin and why is it necessary for ecosystems like Cardano?
Maybe I can take this one because it's so easy, and then I will skip the hard questions. A stablecoin is simply a cryptocurrency that is pegged to usually a fiat currency. So you can think of a USD denominated cryptocurrency or euro. So, and there's different ways to achieve that. You can have fiat-backed stablecoins, so you would have the equivalent amount of fiat, and then you have the one-to-one ratio, or you can have more crypto-native types of solution where you have crypto collateral. The most famous example is DAI in the Ethereum world. They were the first one. And then there's a bit more advanced, fancy things, algorithmic, but I think this is beyond the discussion of today. So to answer your question, is a cryptocurrency pegged usually to a fiat currency to maintain the value stable.
Okay, and why is that now so important to ecosystems like Cardano?
Because historically, when you wanted to trade, exchange your Bitcoin, your Cardano to a stable currency, you needed a centralized exchange like Binance or Coinbase to have this ability to trade. And this came with limitation. For example, if you wanted to send your fiat from exchange A to exchange B, you needed to use the traditional banking rails. So, for example, on a Sunday, you could not move your fiat money. Now with stablecoins, you can stay in the crypto, in the blockchain, in Cardano, and swap your ADA to a stablecoin or the other way around and move your fiat from one DEX to the other or to one centralized exchange to another. This is why they became very, very popular stablecoin. The first one was USDT, which is still one of the most used. I think is the most dominant. But yeah, that's the problem they solved. They go around the traditional banking rails.
Perfect. Any one of the table members would like to add anything to this, or?
Yeah, I'd like to add one more thing. I think leverage is extremely important in crypto, and stablecoins allow us to get pretty efficient leverage. So you can go to a borrow lending protocol, money market protocol, whatever you want to call it, deposit your ADA, borrow some USDC-backed stablecoin, sell it for ADA, redeposit that as collateral, lever yourself up. It's extremely common. This looping idea is extremely common way to get leverage. I think we all know that crypto has a heavy tilt towards degeneracy at this point, and it's extremely important to allow people to get that efficiently and cheaply. So I don't want to forget the degens out there. It's extremely important. So risk on and risk off. So Giorgio talked about the risk off, which is important. I want to get out. How do I get out quickly and efficiently? You need stablecoins to get out. And if you're a US dollar-based investor, US dollar is a great way to get off. That is your risk-free currency. But let's not also forget the importance of risk on as well.
Exactly.
Yeah, maybe Marco, if I may add, they allow you more in general to build derivative structures on top in a decentralized fashion with smart contracts. You can
100%.
leverage, you can do anything you can think of with fiat. You would need to call your bank and change it's like, this is not possible. Yeah,
exactly. Thank you, by the way, for clarifying that. In the meantime, Brandon, how is it going with the audio?
I believe we should be back. Can you hear me?
We can. Perfectly.
Awesome. Fantastic.
Great.
Hi, Brandon, founder of Big Blimp. And just sort of adding on to the conversation, I think a really sort of crux thing is, I mean, stablecoins are one of the avenues of crypto, one of the, I suppose, value offerings where it's really found strong product market fit, right? So when you look at the usage of stablecoins, bar to bar, every single year, the usage is rising. It's an expanding space. It's ever growing. You know, it's more applicable every day, right? The biggest sector, I would say, is just any sort of transcontinental, payment, right? So if you're sending payment off, not locally, different jurisdictions, it's the most efficient way of actually settling value exchanges, right? So if you look at big companies, companies in the Fortune 500, we're talking Tesla, SpaceX, etc. They actually do settle their payments in stablecoins, right? And then they'll just use their local exchanges as sort of swapping it over to fiat. So it is one of those things where under the hood, it's not as apparent unless you're looking under the hood how essentially revolutionary this is. So yeah, I just wanted to sort of tack that on, and happy that Mike's working.
Absolutely. Thank you there. Thank you. So you just mentioned one thing there, Brandon, that is that the stablecoins, they're immense popular, growing. I mean, Giorgio, you also mentioned USDT as the first, most dominant, but obviously they're not the only ones. And even within our ecosystem, we have multiple native stablecoins. I'm wondering what makes them so popular, first of all, and secondly, what is the earning model? I mean, I'm pretty sure that stablecoin issuers don't just issue a stablecoin because of the wonderful idea, but there has to be an earning model behind of that. So before we dive really deeper into the whole matter here, can we get a bit more clarity from one of you guys here on the panel? How do stablecoin issuers earn their money? How does stablecoin earn them money? What is the earning model here? Anyone care to or dare to take that?
James, you want to take it, or
Benny, I'll let you go first. And anything you miss, which typically you don't, I'll follow up on.
much appreciated. Yeah, so it depends on the type of stablecoin that you're issuing, whether it's algorithmic or if it's a fiat back one. My specialty is on the fiat back side, so I'll more so answer that. The way in which stablecoins make money is they receive the fiat from the end user that's basically looking to tokenize their dollars, and they invest that into US treasuries. At least these are the ones that are regulated. So like, let's say USDM, USD8, USDC, PAX, so on and so forth. Some stablecoins do actually allocate the treasury into other assets that are still, I would say, relatively high grade. But for the most ones that are issued out of the US, they just make their money by reinvesting in US treasuries and collecting the 4% yield on an annualized basis.
Okay. Thanks there. I think, James, care to do a follow-up on that?
Just that there's also a variety of other ways to be able to do that. Obviously, if you start creating affiliate networks, like say, for example, with payment rails, things of that nature, obviously there could potentially be some back end there, depending on how you're interacting with those entities. Also, wallet providers, things of that nature, that also could be something where there might be some recurring revenue stream that would come from that, depending on how you're managing that on the back end, having to do with fees and what have you. I would say probably the most important thing, as Benita mentioned, is just the assets under management and ensuring there's a transparency there having to do with where those assets are held, how it's being reported, and ensuring that we kind of take it to the next level there, which USDM currently is doing with the third-party attestation. So we start to see that proliferate a little bit more. This way it allows everybody to get into a trustless nature versus a trust me bro nature.
Okay, so are we saying now that the way stablecoin issuers earn money is like for your fees? Are we saying that?
It can be from fees. It also can be from, let's say you have a collaboration with a market maker, for example, and you're doing OTC trades, things of that nature. If there is a fee to be generated there on the back end with large significant trades, then of course the stablecoin provider can, not necessarily the manager can be a part of that, but that third party that is working. So we have a company called W3I, which is a software as a service company, which Moneta is one of its products. Ultimately, with W3I, it can participate in that and allow themselves to be separate from the actual manager of the stablecoin. The other nice thing about it is that we really followed the USDC route, having to do with keeping and making sure that the assets are bankruptcy remote, which is the other really important thing I think people need to look at when they're looking at stablecoins. Ensure that that structure is set up properly. And USDC obviously has paved the way for everybody to be able to do that. So it makes sense for stablecoins, responsible ones, and their teams to be doing something of that nature.
Okay, I'm gonna ask someone else here in the panel, because a great way of testing if it's clear, that is by asking someone else if they understand what you both just said here. So I know that Elder, you do have way more knowledge than I do, when it comes to stablecoin. Is that clear, or is there a way you would say it, word it, formulate it otherwise that would make it more easier for a layman to understand? Again, the question is, how does stablecoin issuers earn money? What is their earning model?
Yeah, I mean, I think it really just kind of depends on the approach, just like, both James and Beneath were saying. It really depends fundamentally on, like with the fiat-backed stables, what are they actually doing with the actual fiat, on the back end side of things, right? So that you can, obviously you're trading, whatever fiat-backed stable coin that you have on chain. That's actually translatable to, in most cases, translatable to actual dollars or treasury notes or stuff like that. And then they generally earn interest off of that. And that's, one of their main revenue sources. There could be other things as they were also talking about, such as, fees for minting and burning, or various other services that they might provide.
That's clear. So basically, you're saying there are many different methods of generating a revenue off of these stable coins. One of them is the fiat that you receive as an issuer, that you reinvest those funds, generate an interest, and another way is basically the fees for minting and probably burning as well. I hope that's clear. So we've kind of set the foundation here for that understanding. I do want to have a look at the proposal, because that's what we're here for eventually, right? I mean, you guys have put together, again, together with many from the community and also the founding entities. So there's a lot of collaborative effort that went into this document here. But the document itself, obviously, should be looked at more in detail. Elder, Marco, you guys are the authors of this governance action proposal. Can you kind of give us the high level overview, TLDR, before we dive right into it?
Yeah, sure. Yeah, I mean, the basic idea behind the proposal is that we withdraw 50 million ADA from the Treasury. And the idea is not to actually spend it on, people or anything like that. But the main purpose of this withdrawal is to actually add liquidity into like the DeFi ecosystem, specifically around stablecoins. So the basic idea is to try and do this is what I would consider to be as trustless as a way as you possibly can. Meaning that we establish a committee of people to manage the funds that are being withdrawn from the Treasury, and they're ultimately the ones that try to do their best to try and manage it as well as possible to make sure that the funds actually make it into the DeFi ecosystem for people to be able to use. The goal is not to try and make sure that like Cardano Foundation or IOG or Emergo or anyone like that actually has control over these funds. It's actually, the committee as a whole that's trying to maintain these funds for the actual Treasury. The primary goal of it is to try and boost the liquidity of stable coins on chain. And then kind of as a secondary goal, it also helps to provide a revenue source for the Treasury itself. So the idea is that, as we deploy the liquidity to DEXs or lending protocols, any of the fees or interest that's generated on that, goes back into the Treasury. So it helps to serve as a revenue source for the Treasury itself. Marco, did you have anything that you wanted to add to that? It was just kind of a very high overview.
No, I think that's a great overview. We'll get into details.
Perfect. I love that. And thank you, by the way, for explaining that and giving that high level overview. Also a bit about the rationale for this. Brandon, when you heard for the first time about this proposal about utilizing Treasury funds for, let's say, boosting stablecoin liquidity, what was the first thought that came to mind?
It's a really good Kickstarter. And to sort of hearken, by that I mean it's a really good initiative to actually get things going, because and as per laid out in the proposal, and as Elders said initially as well, it's meant to actually sort of get the gears going and actually incentivize further capital influx, right? So this isn't necessarily an end or be all solution, but it's meant to sort of pave that foundational base of capital to actually, again, sort of attract more capital. And you can kind of take this. You can kind of sort of take this a bit sort of like further, right? There's examples of sort of initiatives like this being done, right? And specifically in this instance, when it comes to just the advent of stablecoins, you do kind of need to have this base of liquidity where people can trade. They can sort of offer capital, can sort of just inflow, and then you can sort of have just organic demand sort of formulate from that. So yeah, I thought it was a really good initiative just from the start, and I thought, yeah, this is a fantastic sort of Kickstarter.
Yeah. Okay. So, thank you, by the way, for answering that. I'm going to look now really at you, Giorgio. I know you're one of the you've provided feedback on the proposal, but why not go the organic route? I mean, why use treasury funds for such of a for something that we don't know what the outcome is going to be? Something so risky, basically. I mean, yeah, I
Yeah,
mean, yeah, go ahead, sure.
that's an excellent question, and I think it's how I would see it is there's a bit of a chicken egg problem, right? We cannot have very good DeFi until we have good liquidity, and we will not good liquidity to get the good DeFi. And I see using the treasury money, the community money to bootstrap the liquidity, provide the solution to get there with like as a collective effort. And it's not that we are spending money, we are putting the money to work. We are kind of investing the treasury money in a kind of a Cardano funds to make our kickstart our DeFi ecosystem. It's something that has been done in many other ecosystems, I would say relatively successfully, because remember, it's not ADA that we are burning, is ADA that we are putting to work. And hopefully, as you said, we will attract organically more and more users. And one day we will, the wish is that we will not need this anymore. But to kickstart, to growth hack our DeFi, I think this is the best solution, right?
Okay, so kickstart. In other words, there is no idea to having it as a permanent solution for years. This is, let's start the first year, see what the outcome is, and if necessary, let's submit another proposal for a second year. Am I seeing that correct?
Yeah, and talking to all the DeFi users of Cardano, there's the common problem is the low liquidity, and they would like to do more if there was more liquidity, right? And they are also afraid of provide more liquidity because there's so little liquidity, and the risks of participating the stakes are higher, right? And if we could use the treasury ADA to mitigate those risks for the early participants, I think we can then have a more organic growth and get these things off the ground. Yeah.
Okay, so then I was wondering, and I'm gonna look to you, Vinith. You're here, Vinith. Obviously, this is, if you don't feel comfortable answering the question, you don't have to, but I have to ask, because why do you think that USDA, for example, right, should qualify for such support?
That's actually a very fair question. Mainly due to the fact that we are a private company, we are for profit, and we are looking to generate yield off the treasuries. I would say the best example that I could give in regards to why I believe that we should qualify for a part of this proposal is due to I would say there's two issues that currently exist within stablecoins. The first one is the lack of initial liquidity or the lack of pool liquidity. The second one is how do you actually get money in and out of the Cardano ecosystem to traditional fiat rails? And that's one of the things that we focused on over at Ansense, was just building out those bridges so that people all around the world can be able to contribute their own liquidity into the ecosystem and out of the ecosystem. And so we're trying to address the problem, I would say, in different ways, but also I feel like they're relatively complementary. So as opposed to just providing liquidity all up front, we're looking at how do we continue to support this after the initial liquidity has already been provided? Because after that 12-month period runs out, how do you keep this to be a sustainable business moving forward, as opposed to continuing to tap into the treasury? There's a tertiary thing that we're also looking at doing, which is, right? Oh no. Give me 1 second. I may have disappeared.
No, we can
Okay,
see
I'm
you.
back.
We can hear you. Yes.
Okay. Lovely. The tertiary thing that I kind of wanted to go into, which was one of the reasons why I think that we are struggling with liquidity is the lack of infrastructure within Cardano. So, like if you look at Solana, if you look at ETH, if I'm creating a native asset in any of those other ecosystems, I've got access to Fireblocks, I've got access to Copper, I can play with the custodian. So, an issue that we ran into while getting market makers for USDA was trying to convince them to get over the building hurdles of getting into the Cardano ecosystem. So, for example, if a market maker wanted to come in, they would have to integrate directly with the DEXs. They can't use their traditional infrastructure that they're comfortable with when they're making markets in other locations. So, this is an area that we're looking to heavily invest in, which is again just clearing the path to make it much more simpler so that Elder is providing that first step in regards to his proposal, which is how do we solve the immediate issue now? What we're looking to figure out on the USDA side is how do we keep this moving forward and have it be sustainable for a longer period of time?
But Vinit, you mentioned something there earlier, and this is really not about USDA, right? But
Yep.
you said that certain parties find it difficult to build solutions on Cardano that for stablecoin. Sorry, did I hear you
So
understood you
not
correct?
it's not just for stable coins, but it's the market makers, right? So like for example, like we're seeing this. I would say. Call it an issue, and I'm gonna call an issue an issue. Like, sorry guys.
It's okay. It's okay.
Okay, I'm gonna be like this for a little bit if you guys don't mind. Um, so right now, like you have to have a market maker that's able to maintain the peg. Let's say for right now, like the biggest stable coins are, USDA, USDM versus ADA pairs. Whenever the markets move on centralized exchanges, you need a market maker to sit there and be able to adjust the prices. Otherwise, you're kind of out of bounds.
Mhm,
And so these market makers have an incentive to come in and actually arbitrage these markets against the centralized exchanges to keep the prices tight.
mhm.
The issue that we've run into while going out and sourcing these market makers is, oh, you guys are building on Cardano. We're not set up in order to be able to trade within your ecosystem. So,
What
like
does
if
that
I,
mean? What does that mean?
so for example, if I'm a large algorithmic market making firm, where I'm just out there to make profit by creating or by closing these spreads and taking advantage of these arbitrage opportunities, uh, I have a setup. I have an entire back office in place. So if I've got capital deployed, like let's say, for example, it's through Fireblocks, I have capital deployed in Fireblocks. I can actually get a credit line across multiple different exchanges for me to be able to buy and sell various assets quickly. For them to come into the Cardano ecosystem, they actually have to set up their own custody systems. They have to set up their own APIs. They've got to build into our ecosystem, which is very different than me just throwing up something onto another ecosystem where a lot of this tooling has already been put in place. So again, this is what we're kind of pushing towards for a more longer term perspective is let's work towards getting this infrastructure enabled so that we can actually, like, once Elder kind of pops it up for us, we can take it and run and actually have it be supported moving forward by other groups of people as opposed to, let's just say, the founding entities of Cardano or the Cardano Treasury.
Understood. Understood. Thanks for clarifying that. Appreciate it. Elder, I saw you were nodding while Vinith was kind of like giving his reasoning. Care to elaborate on that? Why you were nodding? What did you agree or
Yeah,
disagree with?
so I think one of the I think one of the things that a lot of these market makers are struggling with is that Cardano is just kind of so drastically different than just about any other ecosystem, right? Like a lot of things that are EVM based, like like the tooling for that is relatively mature in terms of being able to do market making, right? And then on top of that, in addition, like, because USDC is on a lot of these other chains, it's kind of like, there are reliable systems and like, a company with a long-standing history of being reliable that's in place that gives them that extra confidence to be able to come on chain and be able to do that, right? So, trying to set up all of the tooling, especially with like the UTXO system, which is, I think, one of my favorite things about Cardano. But, to be completely and totally fair, it's also one of the more challenging things, I think, about developing on Cardano, just because it is so rigorously validated. You can't put anything on chain that isn't valid, right? And I think that's, that's a kind of a double-edged sword in terms of it's good in that, it's more difficult to make a mistake, but it's also bad in that, some of the startup time to do the development and put the things in place that you need is somewhat challenging.
I'm hearing this. It's an echo, basically. I'm hearing you say this, Vinith. I'm pretty sure I've heard Brandon. I'm sure, and Giorgio. It's like tooling.
We heard it yesterday. We heard it
Ex-
yesterday. Yeah.
Exactly. Also yesterday. It's an echo. Is that true? I'm gonna look at you, Giorgio, and I also want to hear the perspectives from others. Is the lack of, let's say, proper tooling on Cardano prohibiting our ecosystem from thriving? I mean, specifically in this particular case, not only for developers, but also for market makers, stablecoin market makers, whatever you call it. Giorgio?
I mean, I think there's room for improvement for sure, but let's not derail the conversation here on the stable coins, right? If we go,
there is a line in it, because
I think it's a topic for another roundtable. I definitely agree.
Yeah,
and I don't know that is the main pain point for DeFi adoption. We have a good amount of builders, and I've interviewed most of them, if not all of the stablecoin issuers on Cardano at this point. And as the main pain point, nobody mentioned the lack of tooling, dev tooling. The main pain point was the lack of liquidity, right? I interviewed almost all of stablecoin projects and DeFi protocols, and I had the list of questions like, what's the biggest problem you have? And lack of liquidity was always number one. I can pick up my notes, but I don't think that tooling came up often.
Okay. That's it just echoes here within here by several of you here on the panel. Okay, so
and Denicio, there's a chance I could add something here. So, and this is something we tend to like kind of circle around, but never really get to the point of, is that we tend to be thinking small here in Cardano, and we're not really thinking big, right? And the reason is that we've had dApps that have been here for quite some time, and they've gotten to the point now where they've had to rely on catalysts in order to get some of the infrastructure that they're building done, simply because they don't have the users. The market that they're currently in, there isn't enough users within it in order to actually generate a revenue that is sustainable for them. So instead of thinking about thriving or building or risk-taking, they're actually thinking more along the lines of just surviving. And that's really the main issue that we've got here. So I personally think that we have every single developer, we have every single really smart mind currently operating and working within our ecosystem. And we want to make sure that we keep that talent here. And in order to do that, we need to expand our fishbowl. We are currently in a small fishbowl. So I think of it as a small pond. And how many boats can you put on that pond? Not very many, right? So it's the same thing with a market. You come into a market, it's a small little street, you got a few vendors on it, that's great. People walk into it, they see what's going on, they walk out. They go to the other market that's 3 times as big and has all kinds of cool stuff there, right? So what we need is support for those who are currently building in order to create a more dynamic market in order within which to work, right? There are a variety of projects that are currently out right now. Denago, Strike Finance, Brandon, what they're doing with Blimp over there, and Yamfor. There's a variety of different projects we've been building here, and they just simply don't have the users necessary in order to support what's sustainable, just sustain themselves and also be able to grow. And that's really what we need. That's why when Elder put this thing out, I was extraordinarily gravitated to it. This is something that I've been talking about for 1.5 years now, and I've really got to the point where either we need to grow or go. Is the way to look at that, right? And we will see people leave if we don't start to grow our DeFi ecosystem. And that's the point of it. We have all the tools necessary currently, I think.
Yes, absolutely. And the Treasury is one of those, by the way, as well. I'm just going to look now at the high-level overview of the proposal, because thanks also for reminding me of that, Giorgio. So you said here, Marco and Elder, the Cardano Treasury should dedicate 3.33% of the Treasury funds, 50 million ADA roughly, to purchase fiat-backed stablecoin spread out over 12 months purchases. Okay, where did this idea came from? Why 3.3% and why spread out over 12 months? Why not just in one injection?
Sure. Yeah. The 3.33 is just a nice round number to get to 50 million. That's just the starting point. So that's just a nice happenstance. The idea would be to basically DCA like out of ADA, and not 100% of the ADA, to make that clear too, over the course of 12 months. So the idea would be you need, think about what the use cases for the stable coins are. I think an extremely important use case is pairing ADA liquidity on chain with stable coins. And so you actually need ADA to pair on DEXs with stable coins. So you would never sell all 50 million ADA. I think the language says up to 30% could be kept as ADA to be used for things like LPing on DEXs. But the idea is you don't want to just dump whatever, 25, 30 million ADA on the market at one time. You would thoughtfully do it over time, which is why it's written over a 12-month period. So the max would be like 4 million a month, give or take. And that, I don't think we would even hit 4 million a month, because like I said, I think we would be keeping a good portion of that in ADA anyways to pair.
But in the proposal, I mean, that's why I right here kind of highlighted that in green. It says here that there will be a committee appointed, and the committee will be composed of 4 community members and 1 representative from each of the 3 founding entities, meaning Cardano Foundation, IOG, and Emergo. And then you said here, and this is the part that sounds a bit contradicting, the community will be responsible for working with protocols to convert ADA to fiat. So,
yep,
but
totally.
You're saying that not all of the ADA will be converted. That's what you just said here. But
yep.
That's not clearly worded.
Let me explain it too. Yeah. So the idea is, and we made we tried to keep this as objective as possible, but I did, with talking to Elder, we made a decision that we think the majority of the stablecoins chosen should be fiat-backed Cardano native stablecoins. And we can talk about why. We can get into details. The whole stablecoin trilemma, I think, is an extremely interesting topic to dig into. But the idea is a majority should be fiat-backed Cardano native stablecoins. And the reason specifying Cardano native is this is not bridged stablecoins. We do have USDC on chain right now. It's a bridged USDC. I think there's additional risk on top of that because of the bridging mechanism. Some of the largest hacks in crypto's history have been bridges. So we're going to focus on Cardano native and fiat-backed. So in order to actually, there's not enough liquidity on chain to actually go from ADA on chain to stablecoins on chain. The right way to do this would be to go from ADA to US dollars and then use USDM or USDA's minting process to mint the USDA or USDM, for example. So the idea is you actually do need to go into fiat first in order to get the stablecoins at the $1 to $1 range. If we were to go and try and sell, $3 million of ADA on chain right now into USDA or USDM, I have no idea what the price is, but I imagine it's not very good, which is kind of the whole reason behind this proposal. So that's why it says fiat there.
Okay, that's perfect. That's understandable. Can you elaborate a bit about the committee? Because that was interesting. When I read the proposal, like, okay, so there's this idea of using treasury funds, but then I'm hearing about, a committee forming to as an oversight, or how should I see that?
Yeah, I can take this one. So the basic idea is that there's a committee that is formed to manage the funds that are being used to deploy on chain, right? And there's a variety of reasons for that. I think as most people here are familiar with, Cardano in general is very interested in trying to do things as trustless as possible, right? Like, people are very risk averse. And I don't think that's just on Cardano. I think that's across the entire cryptocurrency, ecosystem. But the basic idea is that, by having a committee and using, Cardano's very, uniquely embedded, like multi-sig wallet structure, you can actually do this in a very trustless kind of way, right? Meaning that there's no single person that ends up having full control over all of the funds that are being dispersed, right? So the basic idea here is that, there's a 7-person committee. Each person on the committee participates in a multi-sig wallet. And as a committee, they have to make a decision in terms of like where are funds going to be going, right? And 4 of the 7 members of the committee actually have to vote in favor of performing an action and then actually signing the transaction to take whatever action that they decide on.
Understand that. And in terms of where those funds or how those funds will be deployed, because what I'm reading here is, DeFi protocols with at least 250,000 ADA worth of stablecoin may apply to be recipients of the minted stablecoin. Okay, so there's 2 things here. Why 250,000? Was that just an arbitrary number, or did you did a survey that got sufficient community backing for this 250K? And then secondly, it says here, may apply to be recipients of minted stablecoin. Okay, which stablecoin? Who decide which stablecoin will be minted? Because obviously Cardano has multiple stablecoins.
Yeah, that is, and that's an excellent set of questions. So the 250,000 ADA just comes from me kind of taking like a rough look at the entire ecosystem and saying, okay, where are funding levels at in terms of like liquidity on decentralized exchanges and lending protocols, and 250,000 seem to be roughly kind of like a threshold number. So I'm not even necessarily super sold on that particular number. I threw that in there as just kind of like a guidepost. So I'm perfectly happy to discuss exactly what that number is. But the main point is that, I mean, we don't want to have my basic idea behind having any number in there is, we want to make sure as good stewards of the stablecoin funds that we're actually making sure that we're not just dumping funds into some kind of a random new protocol that, has relatively little history, doesn't have a whole lot of organic growth, et cetera. So that was one of the main reasons by putting any number in there at all. In terms of the minting, the stablecoin, yeah, so I don't actually, and if you look through the entire proposal, I really don't name names of any kind of DeFi protocols in general, or even stable coins. And there's a very good reason for that, right? Like I don't want to pick winners and losers in here. I don't want to take sides. That in and of itself has created, as you might imagine, its own kind of set of issues in terms of like, well, why aren't you including my project in this proposal, right? So I've been very, very adamant that, specific protocols, projects, tokens are not named. I use them as examples, but I don't actually say, these are the things that I'm thinking of, because ultimately at the end of the day, this is something that the committee is going to end up doing some kind of evaluation and making a decision on. So in terms of minted stablecoin, when Marco and I were when we were drafting this, I think USDA had not launched yet, but we knew that it was coming. So we wanted to make sure that, in addition to USDM, we wanted to make sure that the language was, as inclusive as possible to make sure that USDA would not be left out. So the one thing, just kind of going back to what Marco had, referenced earlier, the main focus on this is fiat-backed stablecoins, and there's a variety of reasons for that. So I would say that, the only real hard, the only real hard line I would kind of draw in the sand is that I think the majority of the funds need to go towards a fiat-backed stablecoin. And I realize that's going to be a bit of a controversial statement, and there's a variety of reasons for that we can get into. But that I would say is the only kind of real clear like line in the sand that we draw on this proposal. But that's also not to say that like other types of stables could not be included. So there's actually a section in the proposal where it actually talks about being able to set aside some of the funds for being able to put into like algorithmic stable coins and CDPs and stuff like that. So sorry, I realize that's quite a bit there. So
Totally
I'll back off a
understandable.
little bit now.
That's okay. Giorgio, I was just wondering, thank you, by the way, Elder. What do you foresee to be the main risks of injecting treasury funds into stablecoin markets?
I think there's going to be the risk of very high volatility and maybe some impermanent loss. When you, with the current setup of DEXs, when you lock stablecoins and ADA in a pair, if there's high volatility, the community could perceive as the money being lost. And maybe there could be people seeing these as traders exploiting the treasury money. I think this could be the biggest risk. Obviously, if there's some hack happening, but I think hacks would happen independently of the of these treasury funds deployed. Maybe it would make the hackers more increase the appetite of them to look at Cardano protocols, but I think this is unavoidable. I think the impermanent loss is the need of explaining what it is and why we are taking this risk. I think risk is the right word.
Understandable. The how do you see that, Brandon, from your perspective? What type of risks do you see by taking such approach?
I think it just all comes down to like it has to be mutually beneficial, right? So it has to be mutually beneficial for that's the sort of basis of most of the best deals, right? So when you're deploying capital, it's mutually beneficial for the entity deploying capital. In this case, the funds being talked about, and also the protocol/platform being utilized as well. So in the case of impermanent loss, yeah, that is definitely a factor to sort of concern you to sort of assess and sort of see what's the threshold of before that capital has to be sort of maybe reallocated, etc. But I think it sort of comes down to the beginning point, just if it's mutually beneficial. My focus and my thought process in regards to this is, let's say CDP-based stablecoins utilizing the funds in that aspect, right? Because you're then able to still retain ownership of said ADA, and you're also leveraging said ADA, right? And if you do it very conservatively, it's I don't want to say it's quote unquote it's risk-free, because nothing in this world is risk-free, right? But it's very low risk, right? So in the case of you're deploying it to a CDP-based protocol or something where you can actually still retain ownership of the ADA, you're then minting a tokenized stablecoin. And then you're either selling that and then adding it back to your position to rebuff your position, or maybe you're utilizing that in some yield strategy, right? So where you actually still retain ownership once again of the assets being deployed, and you just get a yield on top of that. That's a really good sort of like mutually beneficial deal. So that's kind of where I sort of think of it. It's a bit of a lengthy, if you will, you can go sort of deeper into that when it comes to the talk of other strategies where your capital is more of at risk. But I imagine from a very conservative sort of standpoint, utilizing protocols where you can still retain the principal, and you're sort of you're more and you're leveraging your assets more. That would be kind of the ideal, I would say, in my eyes. But obviously that doesn't mean that you can't do other things. But I hope that sort of answered. Or
Yeah, perfect. Thank you for that. It brings me back to I think, James, I'm going to ask you that question. So within the proposal, right, there's a section that says here that there will be a committee, and the committee will be composed of 4 people. Obviously, that that committee
So
gets
it's a 7, then it's a 7
3.
plus 4. So would be, the idea is to have 3 from 1 CF, 1 Emurgo, 1 IOG, and 4 community members. So it's 7.
That's correct, indeed. You're right. A committee of, indeed, a 7-entity committee will be managed. Yes. So having such a, let's say, 7-headed committee, do you foresee any risks in that? Or let's say, what risk do you see in this structure?
So there's always risk in everything that you do, and there's really no way of getting around any of that. So ultimately, a 7-member committee at least diversifies that out a little bit more. Also creates the ability for the community to have really a 4-member community. So they're going to be driven basically off of what the community is really wanting, what's most important for the community, and not allowing those that may have some bias about what their particular founding entity is doing, let's say, for example. So then from there, you've got more voice, which I think is a huge turn from what we've had in the past. I honor those who built this thing out and put us where we are today. And I, always make sure that, what they're doing now is also listened to and is important. But at the same time, the community is now becoming a larger portion or a part of, due to the fact that we just went into Voltaire. And they should have a larger voice in just exactly where it is these funds are going and what they're being used for. And ultimately, what I've found is that when you only have 3 particular energies bringing in ideas, you're limiting yourself.
Yeah.
Versus if you have 1,000, so let's say, for example, instead, you're expanding the idea of what it means to be in Cardano and how it is that you can not just survive, but thrive here. So this 7-member committee is going to be extraordinary, I think, personally. There's also going to be rules built in. It's very simple. These things have been done for quite some time in order to ensure that if anybody goes and decides that they're not going to attend meetings on a regular basis, they're derelict in their duties, things of that nature, those then can be removed by the member committee. So there will be guardrails in place in order to ensure that no one particular person can have any say or create any real issue within the committee itself, as far as what I've seen from what's been written.
Yeah, I love that idea. Really, that it's not this thing where if you've been appointed as one of the 7 entity committee, that it's not like once in, always in, but you can be voted out, if you've kind of like making decisions that are questionable. So I just love that idea. Okay, so
and Dionisio, can I add one thing? Just simply on the IL topic, if we think a little bit more long term about what we're doing versus short term, price volatility is always going to be there. ADA is always going to go up and down. We're always going to be in a bearable market. There's really no way of avoiding all that. The key component here is that going in for long term and letting the community know that we're in it for long term. This makes everyone else commit, and they have to commit. They also not just doing it for themselves specifically, but they're also doing it for the community as a whole. So long term is where we need commit at. And in order to get to do that, this particular proposal gives those guardrails and framework necessary in order to keep everybody in the same basket, no matter their own personal designs.
Wow, amazing. Thanks for clarifying that as well. There are 2 parts of this that I still want to discuss, because, and I know might run over a bit of time. That's okay. So it says here that the committee, so on the transparency, the committee is responsible for either creating a monthly report or building a dashboard to describe the ADA held in reserve, the funds deployed to protocols, and all fees, and all fees and other costs associated with managing the treasury. Whose responsibility is going to be for building such tool, first of all? Secondly, wouldn't there be a cost, for building such? How is that going to be funded? And thirdly, shouldn't there be a part of this dashboard? Shouldn't that be how much funds are there, or the revenues being generated by the different protocols, so that it's clear, it's insightful, and people can clearly see if there is a percentage decided upon that should flow back into the treasury, that people can actually calculate that themselves and see that people, these protocols are abiding by those rules, are respecting basically the rules that was set forth before we started. Too many questions in once, probably, but who wants to take this challenge?
I guess I'll start off. So yeah, so this is vaguely worded. Again, a little bit intentionally, not because I'm trying to necessarily hide anything, but because I really do want the committee to take ownership of being transparent about it. So the one requirement that is on here is that there at least has to be a monthly report that is put out by the committee about like what is the status of the funds that they are managing, right? So like where are the funds being deployed at? How much is actually how many fees are actually being collected on the deployed liquidity? How much is being sent back to the Treasury? So that was kind of like my initial minimum requirement, and then as kind of a follow-up to that, I think it's always nice to have some kind of a dashboard where people can just kind of go and look at things live. As someone who runs a DEX aggregator, I don't have any issues like supplying any of kind of like the data pipelining tools that we have available. But at the same time, this is yet another one of the reasons why I was very interested in trying to include the founding entities, just because, they also have resources to be able to assist with this kind of stuff. And I'm not like trying to rope any of the founding entities into this stuff, but I do think that the founding entities are all, I've been, just kind of going back to what Giorgio said at the very beginning. I've been meeting with them and I found them all to be, very open and receptive to being able to work together, particularly on this. And they want to see Cardano succeed, right? Despite any kind of differences that they might have, everyone is really trying to look for the best interests in Cardano. And I guess I wouldn't necessarily see any barriers to trying to have a conversation with the different founding entities to say, hey, how can we kind of put some resources together to help make this as transparent as possible and, try to create some kind of a dashboard to help, make this a little bit more understandable and translatable to, the citizens of Cardano.
Exactly. When it comes to the cost for such dashboard, because the dashboard obviously does not exist, and right now the proposal only speaks about utilizing treasury funds 1.33%, 50 million for boosting stablecoin liquidity. But before we actually get to that point, there are certain, let's say, tools that needs to be put in place first, to help us really manage that whole process. So it's not just, I assume, it's not just using the funds from the treasury for that, but we also would need a portion to kickstart these processes first as well, I guess.
Yep. Yeah. So in the actual proposal, actually, even in the summary, I also have kind of a budget for like handling those kind of costs. So things like, legal fees for trying to create a nonprofit around it, and being able to do some of this other stuff. So in terms of where the funding comes from, there is a provision in there. I've talked to, a variety of people. They think that I overestimated the monthly budgeting for those kind of costs. And I think that's fair. It's very likely that I overestimated it. And I don't think there's any issue with lowering that. I think the big thing that I was thinking, so that the amount is $50,000 per month, which sounds like a very high amount of burn. But considering this is 50 million ADA disbursement, I think relatively speaking, that's a relatively small amount. But the main reason why I had suggested 50,000 a month was largely because I was thinking about the legal fees for trying to set up some kind of a nonprofit to make sure that it's properly established and that we're trying to check all the legal boxes so that everything is above board on it.
Yeah, exactly. I'm curious, Vinith, and I'm also going to look at you, Marco. what do you guys think about the idea of each member of the committee will be compensated $2,000 a month in fiat-backed stablecoin of their choice? It- what do you got? What are your thoughts of that? I will come to the part where it says of their choice, but first, what do you guys think about that idea of compensating committee members? Anyone up for the challenge, Phoenix?
Marco, you want to go first, and I'll follow on.
Sure. Happy to. Yeah. So look, there's two really key decisions that have to be made here. We didn't talk about the first. I'm going to highlight it really quickly. The ability to off ramp ADA into USD fiat is extremely challenging right now. This is likely done through a SEX or OTC deals, and you're likely going to have to hire a market maker. You're likely going to have legal documents between the legal entity set up for managing these assets and the market maker, right? You want the market maker to be acting in good faith. You want best execution, all that stuff. So that decision's that's a tough decision. You need to go out, you need to go find any market maker that's willing to take this opportunity to do this, right? And you need to do research, you need to do operational due diligence, you need to do investment due diligence. There's a lot of research behind just that one decision. Then there's a second decision on which protocols are you going to allocate to? How are you thinking about not just which protocols, but what types of allocations are you going to make? Let's say, there's the classic DEX is a constant product market making DEX right now. There's order books being developed. There's potentially concentrated liquidity. So my point is there's a lot of decisions to be made on how you deploy the liquidity. There's different lending protocols. We could talk about the CDP stuff that Brandon brought up, right? Like you need to be efficiently maintaining the right margins and collateral ratios. There's a lot to be done here, right? So my point is you need extremely thoughtful people and you want them well compensated. I've worked on a handful of DAOs in my 5+ years in crypto. What I found is if you compensate people, you actually do get good people. You can't just expect that random people from the community are going to give you free help, free advice, free tech, free anything. So the only way to actually get the right people on this committee is to compensate them. Now, if they want to do this for free, they by all means can. They can choose to not take the 2K a month if they'd like to. Maybe some of the founding entities won't, I don't know. But I think it's extremely important to compensate. Like you need to compensate good labor. That's the whole point here. We need extremely thoughtful people on this committee because there's a lot of really challenging decisions to be made. We only laid out a framework. There's a lot of decisions to be made underneath the hood. And it's going to take a lot of time at the beginning. I hope by month 8, 9, 10, 11, 12, it's not as much time. But those first couple months are going to take a lot of time up, and people got to be compensated for that, in my opinion.
Thanks, Finith.
Yeah, no, I completely agree with Marco on that. Where it's like, if you don't pay people, they're not going to put in like their best effort, and there's a lot of work that needs to get done. Like also like on the committee side, one of the questions that I actually have for you, Marco and Elder, is like, does the committee manage the trading operations as well? So like, let's say for example, there's a Vinith coin ADA pair and a Vinith coin stable pair, right? Like, are they in charge of managing that conversion of spreads between the various things? Because like I see this more so as like this is like a full-time trading gig, and I feel like the actual compensation, if you were to actually go out and get a trader on the open market, is a little bit on the lower end. So like you're going to find more so dedicated, enthusiastic Cardano people that have a knowledge in trading more so than the professionals. But like I feel like there's a lot of stuff that actually would need to get done in order to be able to manage these positions. Like where do you set your risk limits? Where do you actually stop out of a position? Like what's your exposure to various different markets? Because like this sounds great in a bull market, in a bear market when everyone's running for the door. Like you don't want the treasury to be the one that's sitting on top of all of these coins if there's a probability that they won't come back. So like I do feel like that compensation is necessary. In regards to the numbers, I don't know if I can comment on that, but like I do believe that compensation is necessary.
Yeah, I'm happy to answer that question. It's when I initially thought out this proposal with Elder, like I was thinking you were going to hire a third party to actually do the trading. Let's call it like I called them the DeFi custodian, right? They were the person who, or the group or team that was out there and creating the LPs. If there's a decision by the committee to do order book type of trading, that's a really complicated, really actively managed type of positioning you need to do. We've removed that in the whatever version of the proposal we're on now. What the idea is that the committee will be managing this, but they're going to be taking much more passive positions. So won't be looking at order book stuff, especially up front, won't be looking at concentrated liquidity type of positions. It'll be the classic 50-50 pair. There is no mandate for token XYZ. It's ADA and stablecoins, and it's up to 30% ADA, up to 10% non-fiat backed stablecoins, the rest fiat backed stablecoins. So that's the mandate of tokens that can be held within this mandate. And then, we laid out things like DEXs are extremely important, stable to stable type of DEXs, which would include stable swap invariant, that type of DEX, like a stable swap. The classic, right now I would expect the classic 50-50 concentrated or CPMM type of AMM and lending protocols for now. There's no reason to say you can't do a CDP. I think you need to be a little bit more thoughtful and a little bit more active. So if you think about this committee's, the group actually executing transactions, you need 4 of 7. The goal is to have this committee be across the globe, right? But if you have people who are asleep at a certain point in time, ADA is tanking 20%, you use that as your collateral for a CDP, you do not want to get liquidated. So that's why we're thinking about more passive type of exposures probably makes sense up front. A classic, let's lend out USDX or whatever to this lending protocol XYZ. You don't have to think about it. There's always risks. Don't get me wrong. That's totally possible that the lending protocol has issues too. But the more passive, lower touch ideas would be first and foremost. I don't think it's wrong for people to think about a next version of this with a DeFi custodian either. Yeah, I think that could make a lot of sense.
No, that's clear.
Sorry, just to add to that. So as Marco had suggested, in the original version of this, I think it was much more. I don't know if I want to call it kind of TradFi approached. Meaning you have different third parties that have very specific roles in trying to do all of the management of this. But I think one of the pieces of feedback that we got is it's man, that's a lot of third parties. That is potentially a lot of cost that is going to be involved. And then that's a lot of additional vetting of third parties and management and, all kinds of other things. And, the current version is that, we're really trying to be a little bit more mindful to try and help set the community's mind at ease, because again these are treasury funds that belongs to the Cardano community, right? And one of the we want to again be as good as stewards as we possibly can, so both to try and help mitigate kind of runaway costs and all the management that might be involved in trying to manage the different types of third parties you might need for this. The basic idea is to try and take a more simple approach to begin with, and then potentially dive into a much more complicated structure that might be more beneficial and might be more risk averse, but will also require some additional infrastructure sometime later on.
Well, I respect that approach, to be honest. Instead of, let's say, initially starting with a bunch of complexity, start simple, and where necessary you can apply a bit more complexity basically to it. Conscious of time, I still want to ask about that 2,000 USD a month. That's the thing is, when you put such proposal up front, you need buy-in from the community, because or else just making sure that every step of the way the community is behind you, you have full backing, because only then you're basically assured that your plans can be executed. But I know, Vin, if your time is pressing, and of course we're over time right now, so I do want to kind of work towards wrapping this up. But Vinith, is there anything that we've spoke of today or did not speak of today that you think, hey, we should have addressed that? Just giving you that final word.
Yeah, like actually, I've got a call with Alder tomorrow, so I'm really looking forward to it. One of the things that I kind of realized was turning into a problem because like there was a bunch of people that were approaching us, going, "Hey, could you guys do XYZ token versus USDA?" The issue that we kind of have on our end was like we were not able to I would say manage those positions appropriately. Because like right now, like if you look at it from a stable coin to ADA perspective, I would say like there is a good chunk of liquidity that currently exists out on the market. And like most of the trading that's taking place right now is just like the rebalancing of the books in order to keep in line with what's taking place on centralized exchanges. But like, because I know at least on USDM and USDA, you can move about $100,000 or 100,000 ADA, and like you're getting relatively low slippage figures compared to what you would actually get if you were to execute it on a centralized exchange. So like where I see like a lot of the issues taking place are like these new tokens that are coming up, people that are looking to build and deploy on Cardano through the various dexes. I think it's much more challenging for them to get access to this stable coin or ADA liquidity. And so I think that's an area to explore. I know it's not inside of your proposal, but that's where I see a large chunk of the problem really taking place.
Thank you there. Absolutely. Final words, Elder?
Yeah. So I would really just like to encourage everybody to go and read the proposal. Please do. I think of the criticisms people have given so far, you know, the pay that or compensation committee members are getting is relatively low on the list. Usually it's, you know, why are you not supporting my project in this proposal, which usually gives me a pretty good indication that, you know, we've hit kind of a good balance in terms of trying to mitigate any of the concerns that the community has. But yeah, I would highly recommend everybody go in and read through the proposal, you know, and yeah, vote for it when it goes on chain.
Thank you. I want to go to Giorgio, Brandon, Marco, and we'll end with you, James.
Yeah, I mean, everything was already said. Maybe a call to action would be if you have somebody in mind to join as a committee member from the community, just send it to Elder or to Marco, and we are looking for somebody without conflict of interests. So we are not looking for somebody working on a stablecoin project, but somebody very passionate and serious about DeFi. So that would be very helpful.
Thank you, Giorgio. Appreciate it. Brandon.
I guess like just rounding off thoughts, I think we kind of touched on most everything really for the most part. I would just say if people are interested and they can sort of look through the stablecoin trilemma, I think is a really interesting topic that just doesn't get talked about quite a lot. So just that sort of like balance and mix, and you know, depending on what sort of stablecoin solution that you're utilizing, you know, whether it's fiat backed or whether it's a CDP based or whether it's algorithmic, they both sort of have strengths and weaknesses according to that sort of triangle. So I think for anyone that's interested in the sort of conversation and just general space, I would sort of look at that just to get a better idea of you know, why you might prefer solutions on certain situations, one versus another one as well. So it's a very nuanced conversation, and I think it's a lot of fun. But that's me.
Thank you, Marco.
Just want to thank everyone. This was a great space. We talked about a lot. You had some great questions, so I appreciate them. Please read the proposal. Please don't be afraid to reach out. If you couldn't tell, I have lots of opinions on things, all DeFi or non-DeFi related. So please reach out. You know, Brandon, you want to talk about the stablecoin trilemma? I'm always happy to. If you can.
100%, dude. 100%. I realized who you were halfway through. I was just like, oh, that's Marco. Yeah,
we've talked many times.
yeah, I was just like, oh, that's yeah.
It's always fun to put a face behind the name, right? So yeah, I appreciate the time, guys. This was great. Like I said, feel free to reach out. I'm around. Always happy to have good conversations. Always thoughtful conversations here.
Thank you, Marco. James.
I absolutely love this discussion today. This to me is a call to action for everybody that's in our community that's thinking about how can we make Cardano better. how we can represent ourselves on the wider crypto stage, start to show up to some of these conventions and be respected rather than just looked at as a second-class citizen. Ultimately, we put all our boots on, one boot at a time. It doesn't matter who you are and where you started in this crypto journey, but at the same time, each individual has something to contribute. So by all means, make sure that you reach out to any one of us or anyone else within the community that's thinking about this particular thing and how we can grow our space. Because this is the way to get involved, and your voice, if it's not heard, could be the one that we absolutely need in order to succeed. So just keep that in mind when you're thinking about all the things that we're doing. Everybody here on stage at some point in their lives wasn't part of something greater than themselves, but then they decided to join. And ultimately, that's what I've done here. And this just brings me to a point where in the years that I've been alive, that I'm just extraordinarily excited for where we're going next. So Dionisio, thank you for putting this all together. I know it's a lot of work. Seba in the background, thank you, sir. We do appreciate you. And for everybody else here, thanks for all the efforts that you're putting into Cardano. It does not go unnoticed, at least for me.
Thank you so much. Thank you also for each and every one of you for joining today. I know it's your valuable time. The Roundtable Talk was really an idea by Giorgio. So credits to you, Giorgio, also really for coming up with the full idea and the design. So it's, but of course, it's logic. You know, you've been in contact with the authors, and you've seen, you know, what the potential of this of such a proposal, especially in a time and era when we want Cardano to thrive, but we also understand, you know, in order to do that, we need support, and we have this system, the Treasury, by which we can utilize the funds to boost the liquidity that is necessary to help the ecosystem that is craving at this point really for that type of support. So having these type of conversations and asking critical questions, again, it was never intended to put anyone on the spot, but it's really kind of from a community perspective, making sure that we ask these type of questions, because by asking the questions, getting those answers, there is where we have the opportunity to increase that level of trust. You know, people now understand, wow, there's a lot of thought that went into this. It's not bad. There's no bad and no malintent behind of this. If anything, this is what we need to go to the next chapter. So again, thank you, each and every one of you. Giorgio, you wanted to say something, by the way?
Yeah, no, just also maybe people might ask themselves, why are we focusing on DeFi and not other, you know, NFTs or, you know, track and trace. But when you look at the analytics or like how Cardano is currently used, I think that of the top 10 D apps, 9 are DeFi. And if you look at the amount of transaction, 9 out of 10 are DeFi related, right? If you exclude maybe the ADA, right? So let's get good at how the chain is being used, right? I think it's many people do not realize how important DeFi is for Cardano and blockchain in general. It's just the top use case at the moment. So let's make sure we are good at that.
Absolutely. And again, we have the platform to do that. We have a massive treasury. You know, why not utilize those funds to onboard what we so desperately need? Okay. Thank you all. And until next time, keep engaged and see you.
Thank you. Bye.
Bye.